Hello and welcome again. In the previous video, we discussed about the concept of accounting and its process. In order to deal with various issues in business, we need help of various branches of accounting. So, in this video, we are going to discuss different branches of accounting. Accounting is categorized as financial accounting, cost accounting, management accounting, social accounting, inflation accounting, and human resource accounting. Now, let us get into detail of each branch of accounting. What exact meaning do they hold? First of all, let's discuss the meaning of financial accounting. It is concerned with recording the transactions of financial nature. Financial accounting is based on a systematic method of recording transactions of any business according to the accounting principles. It is the original form of the accounting process. The main purpose of financial accounting is to calculate the profit or loss of a business during a period and to provide an accurate picture of the financial position of the business as on a particular date. The trial balances, profit and loss accounts, and balance sheets of a company are based on an application of financial accounting. These are used by creditors, banks, and financial institutions to assess the financial status of the company. Further, taxation authorities are able to calculate the tax based on these records only. Now, after financial accounting, next branch of accounting is cost accounting. Cost accounting examines the cost structure of a business. It provides information for both management accounting and financial accounting. It measures and records financial and non-financial data. This branch is used to calculate the cost of various products produced by a business concern or the services rendered to the customers. In other words, cost accounting deals with evaluating the cost of a product or service offered. It calculates the cost by considering all factors that contribute to the production of the output, both manufacturing and administrative factors. The objective of cost accounting is to help management in fixing the prices and controlling the cost of production. It also pinpoints any wastages, leakages, and defects during manufacturing and marketing processes. Let us move to the next branch, that is management accounting. It measures and reports financial and non-financial information that helps managers make decisions to fulfill the goals of an organization. This information is helpful for the management for the decision-making process regarding setting up of a new plant, launching of a new product in the market, and in the policy formulation process. This branch of accounting provides information to the management for better administration of the business. It helps in making important decisions and controlling of various activities of the business. The management is able to take decisions efficiently with the help of various management information systems such as budgets, projected cash flow and fund flow statements, variance analysis reports, cost volume profit analysis reports, and break-even point calculation. Management accounting and financial accounting are not to be confused with each other. Both are different. Management accounting serves the needs of the management in decision makings regarding minimization of the cost factor and enhancement of profits. Financial accounting serves the needs of shareholders, creditors, and financial institutions for ascertaining the financial position of the company. Management accounting records are kept secret for the use of management only. They are not made public. Next branch of accounting is the one which has gained importance as a result of high-level industrialization, which has brought prosperity to the society. And this branch is known as social accounting. As we know, business is a socio-economic activity and it draws its input from the society. Hence, its objective should be the welfare of the society. It should owe a responsibility towards solving many of the social problems. In the present age of growing technological, economic, cultural, and social awareness, the accounting has not only to fulfill its stewardship function for the owners of the enterprise, but also accomplish its social function. Changing environments and social parameters have compelled business enterprises to account and report information with regard to discharge of their social responsibilities. The boundaries of the principles, practices, and skills of conventional accounting have been extended to such areas for social disclosure and attestation with regard to the measures of social programs. In the modern times, accounting efforts have been extended to the assessment of the state of society and of the social programs, not for the satisfaction of any individual or group, but for the application of evaluative procedures in the allocation of resources towards better social being as a whole. As per F.F. Perry's Dictionary of Banking, social accounting is the reporting of cost incurred in employing with anti-pollution, safety and health and other societal benefits requirements, and more generally the impact of business entity on the endeavor to protect society, its amenities and the environment. In the words of Richard Dobbins and David Fanning, social accounting is the measurement and reporting of information concerning the impact of an entity and its activities on a society. The National Association of Accountants, that is NAA, committee defines social accounting as the identification, measurement, monitoring, and reporting of the financial and economic effects of an institution on the society. It is thus clear that the social accounting is concerned with internal and external reporting of social cost and benefits both in quantitative as well as qualitative terms by a business enterprise. Next comes inflation accounting. Inflation accounting is that branch of accounting which takes into consideration purchasing power of the money. It is also known as price level accounting. Inflation accounting is a special accounting technique which can be used during periods of high inflation. Inflation accounting requires statements to be adjusted according to price indexes rather than rely solely on a cost accounting basis. Companies operating in countries experiencing hyperinflation may be required to update their statements periodically in order to make them relevant to current economic and financial conditions. It aims to indicate how rising prices and lower purchasing power of the currency affect a firm's cost of refinancing its productive assets and of its ability to maintain an adequate level of profit on the capital employed. One method is to adjust every figure in the balance sheet on the basis of a price index, which reflects the current purchasing power of the currency. Another method suggests to revalue tangible assets at their replacement cost. In valuation of an inventory, inflation accounting treatment can affect the firm's taxable income, cash position, or reported earnings, depending on whether the firm uses FIFO or LIFO method. And the last one is human resource accounting. Human resources are considered as most important assets and are different from the physical assets. Physical assets do not have feelings and emotions, whereas human assets are subjected to various types of feelings and emotions. In the same way, unlike physical assets, human assets never get depreciated. Therefore, the valuation of human resources along with other assets are also required in order to find out the total cost of an organization. In 1960s, Rensis Likert, along with other social researchers, made an attempt to define the concept of human resource accounting. The American Association of Accountants defines HRA as follows. HRA is a process of identifying and measuring data about human resources and communicating this information to interested parties. Now let's move on to the need of HRA. The need for human asset valuation arose as a result of growing concern for human relations management in the industry. Behavioral scientists concerned with management of organizations pointed out the following reasons for HRA. First one is, under conventional accounting, no information is made available about human resources employed in an organization, and without people, the financial and physical resources cannot be operationally effective. Next one, the expenses related to the human organization are charged to current revenue instead of being treated as investments, to be amortized over a period of time, with the result that magnitude of net income is significantly distorted. This makes the assessment of firm and inter-firm comparison difficult. Third one is, the productivity and profitability of a firm largely depends on the contribution of human assets. Two firms having identical physical assets and operating in the same market may have different returns due to differences in human assets. If the value of human assets is ignored, the total valuation of the firm becomes difficult. Moving further, if the value of human resources is not duly reported in profit and loss account and balance sheet, the important act of management on human assets cannot be perceived. And the last one is, expenses on recruitment, training, etc. are treated as expenses and written off against revenue under conventional accounting. All expenses on human resources are to be treated as investments, since the benefits are accrued over a period of time. Now, as we are clear with the need of HRA, now we will be moving towards the objectives of human resource accounting. Rensis Likert described the following objectives of HRA. First one is providing cost value information about acquiring, developing, allocating, and maintaining human resources. Secondly, enabling management to monitor the use of human resources. Third, finding depreciation or appreciation among human resources. Fourth, assisting in developing effective management practices. Fifth, increasing managerial awareness of the value of human resources. Moving further, sixth point is for better human resource planning. Next is for better decisions about people based on improved information system. And the last one is it assists in effective utilization of manpower. I hope you are clear with different branches of accounting. Thank you.